China's foreign ministry said that China and U.S. trade negotiators are set to speak soon again after a U.S. administration official said that an interim deal might not happen in time for a signing in Chile next month. Joining us now to discuss China trade is Renaissance Macro Research Head of Policy, Stephen Pavlik. Steve, great to have you here.
Thank you for having me.
Just your latest on what you just heard. It seems like there's a lot of flip-flopping and perhaps misinformation that investors are trading on.
I think the Chinese official confirming it is positive because ultimately I think the U.S. has a desire here to pursue phase one, and that China is signaling that they're interested in doing that as well, I think is encouraging. I wouldn't read too much into the administration person's comment that you mentioned regarding not completing it by the APEC summit. I think that's still the goal, but I think what they're signaling is if, it's difficult to put this agreement onto paper, and if for some reason that can't happen, then it could happen presumably sooner after the APEC summit. Recall this happened with Japan recently. There was an intent to try to resolve U.S. similar thing, threatening auto tariffs in this instance, with Japan agreeing to buy some additional agriculture products. They were hoping to have Trump announce it when he was at the G8 meeting. They kind of signed something to announce that they would sign something later, which they did. And my hope and my suspicion, that's probably what the administration official was referring to.
Are you surprised to see the markets at a record, given where we are in these trade talks?
No, I think trade has probably been the one thing that's been holding the markets back, candidly, at least the biggest thing in my view. And I think now that you're seeing more signs for optimism, it makes sense that markets would respond favorably to these encouraging reports. I think you got to look at the time horizon, though. I mean, positive news on phase one is encouraging, but is that going to be enough to get business investment off the sidelines?
Is it?
I don't think so. And I think when you talk about what would be in phase two, I think that's the more challenging issues. And you're kind of addressing the low-hanging fruit here in phase one. When you punt all the more difficult topics to phase two, clearly it becomes more challenging to land that plane, so to speak. So my guess is you'll see a positive reaction to phase one. Presumably a lot of that's already priced in, but trying to project what this means longer term, I think, when you get to phase two, those thornier issues, the timeline for that, opportunities for, again, talks to break down, that's something I think markets are going to have to wrestle with for a while.
So phase two would include things like intellectual property, opening up markets there in China. Are those the thornier issues that you're talking about?
Correct. The thornier issues, the structural issues, the intellectual property theft, forced technology transfer, subsidization of state-owned enterprises, which is something I think China is very reluctant to give up, market access, although one encouraging part of phase one was that they were talking about opening up market access for the U.S. financial services sector, and that is a way you could argue to address some of the intellectual property theft, where if you remove the ownership caps for the Chinese, at that point, U.S. companies would no longer be forced to transfer sensitive technology over to their Chinese owner.
Switching gears real quickly, how worried, you deal with a lot of buy-side institutional clients, how worried are they about Elizabeth Warren winning the presidency?
Very, very worried. And I think with respect to China, something that I think people should keep in mind is, having worked with Elizabeth Warren's office when I was at the Treasury Department, she's very hawkish on China. So I don't think, there's this, I think, sometimes misperception out there that China just wants to wait out Trump in hopes of getting a better deal. And Warren may try to outflank him there and not be as willing to remove tariffs or negotiate on sensitive technology issues like Huawei. So regardless, if Warren were to win, the time for her to get her new administration in place and formulate a response to China, presumably tariffs would be in place during that entire period. So.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.